regarding the banker customer relationship. What is banker customer relationship? When we are dealing with the bank, when the bank is providing services, when the bank is providing services to the customer, there are two parties, one is a banker, other is a customer. In different kind of services, the relationship is different. So we will be learning about those. So first of all, it is regarding the banker. So banking is defined under, as we already discussed, it is defined under section 5B of the Banking Regulation Act. Okay, so what does Banking Regulation Act section 5B says? It says banking is nothing but accepting of deposits from public for the purpose of lending and investment. So किस पर्पस से हम एक्सेप्ट करते हैं? लैंडिंग के पर्पस से एंड इन्वेस्टमेंट के पर्पस से जो पैसा है वो इन्वेस्ट किया जाता है पब्लिक से. So it is acceptance of deposits from public for the purpose of lending and investment, but this deposit so accepted from public is repayable on demand or otherwise using checks और कैश और डिमांड ड्राफ्ट्स. ओके, लेकिन जो पैसा आपने रिसीव किया है डिपॉजिट के रूप में, दैट इज पेएबल ऑन डिमांड. जब डिमांड आएगी सामने वाली पार्टी से, तब ये पैसा बैंक को रीपे करना होगा. ओके, देन इट इज रिगार्डिंग व्हाट आर द फंक्शंस. What are the different functions? So some of the functions are remittances, locker facility, safe custody of article services, foreign exchange, discounting of bills, and further credit facilities, that is fund based facilities also, and further non fund based credit facilities also. So letter of credit, bank guarantee, co-acceptances, and other than that the fund based facilities, likewise a CC limit, term loan, or any kind of facility that is being provided by the bank. Okay, all are covered under the different functions of the bank. And what about the obligations and duties? First, and the statutory obligation is to duty to honor the check. So there are different stipulations in which cases the checks are to be honored, and that is a statutory obligation. And further, the second obligation or duty is regarding to maintain the secrecy of the account. Okay, so this is also you can say it is a fiduciary obligation on the bank to maintain the secrecy of the account. Okay, then further, who is customer? There is no legal definition available for the customer. There is no legal definition available for the customer, and based on different judgments under section 131 of the Negotiable Instrument Act, a customer is a person who wants to open account with bank which bank accepts with proper introduction. So customer is whom? Which wants to open. Customer is who? Who wants to open account with the bank, and further the bank accepts with proper introduction. So bank accept करता है customer को, but with proper introduction. This is based upon judgment under section 131, and as per KYC guidelines, as per know your customer guidelines, a person who is engaged with a financial transaction or activity with the reporting entity. When we talk about the reporting entity, we meant to say any kind of financial institution, bank or banking institution, even the NBFCs, all are covered under the term reporting entities. Okay, in case of KYC, basically under the FIU IND, the reporting entities, that the bank, all India financial institutions, NBFCs, all the financial institutions further submit the information with the FIU, that is Financial Intelligence Unit. Okay, that is why it is said to be the reporting entity. So person who is engaged with any kind of financial transaction or activity with the reporting entity, and includes a person on whose behalf the person who is engaged in transaction or activity. What does it mean? We are talking about the agent over here, or beneficiary owner, or beneficiary owner. Okay, we are talking about the two entities over here. One, it could be the person himself or herself also who is dealing with the bank or the financial institution or reporting entity, to sum up. And further, it could also be the person who is working as an agent and is working or is having a transaction, is performing a transaction on behalf of some other person. Okay, so both these persons are said to be customer as per the KYC guidelines. So when does the banker customer relationship terminates? In which case the banker customer relationship terminates? So it may be the case that the customer closes the account, and further bank closes the account. It could be the adverse case that the customer is not following the guidelines or the paradigms which are being placed by the bank itself, and in that case the bank can close the account, and further with death of the customer, with insanity or insolvency of the customer, the banker customer relationship terminates. In all these cases the banker customer relationship terminates. Okay, now tell me one thing. What if person A, who was maintaining a deposit account, saving fund account, when bank XYZ terminated his account in 2019. Terminated his account in 2019. It means the banker customer relationship ceased over there. The banker customer relationship ceased in that case, because customer A, who was customer before, who was maintaining the deposit account, is not customer anymore of bank XYZ over here. Okay, now what next? In 2021, let us say person D visited bank XYZ and asked the details about the transactions in account of person A. Can XYZ deliver this information to person D over here or not? So person D, who is not related to person A in any way, or maybe related to person A, maybe his son or his daughter or his wife or his wife, in that case, can bank share this information, or should the bank be sharing this information with person D, because the banker customer relationship already terminated in 2019. Now A is not customer anymore for XYZ bank. No, the answer is no. It's a fiduciary responsibility or obligation on the bank not to share the information and to maintain the secrecy of the customer even after the banker customer relationship terminates. Even after the banker customer relationship terminates, even if after the banker customer relationship is terminated, the bank will not share the information with any third party until or unless the information is demanded by some legal entity. Okay, then it is regarding the different relationships over here. Debtor-creditor. When person A is maintaining saving fund account, we are talking about A is maintaining saving fund account over here with bank XYZ. In this case, A is customer and XYZ is bank. What would be the relationship? A is creditor over here or XYZ is creditor over here? Kindly let me know. Who is creditor in this case? Customer or bank? Customer or the bank? Who is creditor? Who has lent a sum of money? And further, who is debtor? Who owes some money, who needs to repay the amount back. In this case, A is what? A is creditor over here. Because A is maintaining saving fund deposit account with bank XYZ over here. A is maintaining saving fund deposit account with XYZ over here. So XYZ has the obligation to repay this amount if demanded by A. That is the definition we read about. Regarding section 5B, if you remember, that bank accepts the deposit from the public for the purpose of lending and investment, but this deposit is payable on demand or otherwise by check, demand draft. Okay, so A is creditor over here and XYZ has the obligation to repay this amount, so XYZ is debtor over here. So XYZ is a debtor over here, or we can simply say XYZ debtor over here. Okay. The full course videos in Hindi mixed English language are available in our website iibf.info. You should be enrolling into the course if you want to learn in Hindi. Okay, have you learned this concept? Okay, now let us take another example. In this case, ABC Bank extended loan facility, let us say term loan facility, to person B over here. Now a loan facility is extended by ABC Bank to B. In this case, bank is debtor or creditor. Bank is debtor or creditor. Sir, those videos are also in full detail over here. I can say in much more deep way over there as explained in here, because that is a comprehensive course and this is a crash course we are covering. Okay. So in this case, AB extended the loan and B has the obligation to repay it back. In this case, ABC Bank over here, ABC Bank over here is the creditor. So AB is a creditor and B is debtor over here. B is debtor over here. Now the question could be also in the way like ABC Bank extended CC limit. ABC Bank extended CC limit to person B over here, which is showing a credit balance of 4500, which is showing a credit balance of 4500. Now in this case, ABC Bank is creditor or debtor. Now in this case, ABC Bank is creditor or debtor. Kindly please mention this number over here while answering. ABC is creditor over here or debtor. In the third case where ABC extended a CC limit to person B over here, but the CC limit is showing a credit balance of 4500. Now in this case, ABC is creditor or debtor. Kindly do answer fast. Yes, definitely. It is like same deposit account because now it is in credit balance. So again, ABC is debtor over here. ABC is a debtor over here. Is it clear? Is it clear over here? So debtor creditor relationship clear हो गया होगा. So let us move further. So next it is regarding bank as trustee. Bank as trustee. So if a customer keeps certain valuable or securities with the bank for safekeeping or deposits money for a specific purpose, the banker becomes a bailee, also called as a trustee. Also called as trustee. So when we talk about safe deposit of articles, when we talk about safe deposit of articles, in this case the relationship is of the trustee. The bank acts as trustee. What do you mean by trustee? In case of mutual fund also we read about na. Okay, so bank here acts as trustee in this case. Bank also acts as bailer, bailee. Bank also acts as bailee. Now the next concept it is regarding the bailee and bailer. We will explain. We will be learning over it. So the next concept is regarding the bailee and bailer. Bailee and bailer. So bailer transfers the possession but not the ownership. A bailer transfers the possession. Bailer is a person who transfers the possession of the goods. Who transfers the possession of the goods to another party. So if person A over here, transfers the possession of the goods with person B, okay, now person A has transferred the goods, he will be bailer. He would be bailer. And the person to whom the possession of the goods is transferred is bailee. And if we take the case of the safe deposit of articles, in that case also, let us assume B is bank over here. So A transferred the possession of goods or article to person B over here. Okay, so person B is said to be bailee and also acts as trustee in that case. That is the concept. That is a concept regarding it. And just keep in one thing in mind, that in case the relationship is bailee and bailer, there is only transfer of possession. There is no transfer of ownership. The ownership of goods is or articles is not transferred. Only the possession of goods is transferred. Okay. So there are two different things. One, it is regarding the possession, and other thing, it is regarding the ownership. So possession is transferred but not the ownership. Okay. Next relationship is regarding agent principal. It is regarding agent principal. For ancillary services rendered by the banks like remittances, collection of checks, bills, etc. on behalf of customer, the bank is agent and customer is principal. The bank is agent and customer is principal. Is it clear? So whenever some of the services are ancillary services are provided by the bank, for example, it is remittance, or it could be regarding collection of checks or collection of bills, here the customer acts as the principal. Customer acts as the principal and the bank is agent. For example, for standing instruction. So we can take an example like person A given a mandate to bank ABC, a standing instruction to bank ABC to debit his account on 10th of every month and credit the amount to his recurring deposit account. So A given a standing instruction to bank ABC over here to debit his saving fund account with rupees 10,000 on 10th of every month and credit the same account, credit the recurring deposit account with the same amount. Okay. Now in this case also, ABC will be acting as an agent and A will be acting as an principal. Okay. Here we are talking about the relationship between the customer and the banker. Next we are going to cover the KYC guidelines. So again, as we discussed, Reserve Bank of India is empowered under Section 35 of the Banking Regulation Act. Reserve Bank of India is empowered under Section 35A of the Banking Regulation Act to issue directions to the banks, any directions to the banks which is in the good faith for the banking policy or for the depositors, which is in good books for the banking policy or for the depositors, RBI can direct those guidelines. So KYC guidelines are also directed by Reserve Bank of India under the same Section 35A of the Banking Regulation Act. Okay. Other than that, Banking Ombudsman scheme is also under the same act, same section over here. So these KYC guidelines, that is know your customer guidelines, are as per the recommendations of Financial Action Task Force standards. So Financial Action Task Force Financial Action Task Force is there so as to combat the financing of terrorism and further anti-money laundering. Okay, so standards on AML or CFT are provided by the FATF, and as per the recommendations of FATF, these guidelines have been issued by Reserve Bank of India under Section 35 of the Banking Regulation Act. And these guidelines, very importantly, these are applicable on all of the accounts and transactions. These are applicable on all of the accounts and transactions. And further, bank must possess a board approved KYC policy. So bank must be having a board approved KYC policy to take care of the Reserve Bank of India guidelines. So RBI issues the guidelines. So RBI is the Karta Dharta. So RBI issued these guidelines that must be followed by the banks. Okay. Now the board of directors further will take care of these guidelines and will implement a policy. So KYC policy must be board approved. And further the provisions of PMLR, that is Prevention of Money Laundering Rules, and Prevention of Money Laundering Act must be complied with. Okay, those must also be complied with. And what does the KYC policy deals with? It deals with customer acceptance policy, risk management, customer identification procedure, monitoring of transactions. So we can say there are 4 pillars under the KYC policy. First it is CAP, RM, CIP and MT. Okay, CAP means customer acceptance policy, RM is risk management, third one it is customer identification procedure, and fourth it is monitoring of transactions. Okay, first of all it is regarding the customer acceptance policy. So which customer or which person should be the customer of the bank or which should not be. Okay, so no account should be opened fictitious. So fictitious named account or Benami account is not to be opened, so any person who does not disclose his information or who do not want to disclose his information or his identity, in that case no account should be opened. And further, if the name of the person or the identity of the person matches with any person in the sanction list, if the name of the person or the identity of the person matches in the sanction list, in that case also the account should not be opened. What do I mean by the name and identity? It means if the name matches, that account is should be striked off and should not be opened, but it can be striked off once the identity is disclosed by the customer and it does not matches that one with the sanction list. Now what is a sanction list? Let us assume FIU IND. FIU is Financial Intelligence Unit, IND over here. Now FIU IND listed the names of those entity or those persons who may be or who are involved in money laundering practices and terrorism financing practices. Or terrorism financing activities. Okay, now if this list is given by FIU IND, okay, that particular list would be said to be sanction list, or it may be some other organization or corporation by whom the list is provided with. Okay, so any of the sanction list, if the name or identity matches, the account should not be opened. And further, name appearing in schedule of UAPA. UAPA is Unlawful Activities Prevention Act 1967. Or if the name of the person is appearing in that schedule, the account should not be opened. Further, it repeats FIU alert list, then it is ECGC or RBI caution list, or it could be criminal list of various law enforcement authorities. Okay, in all those cases the account should not be opened. Then it is regarding the risk management. Again, very important. Risk management. See, there should be 3 profiles as per the Reserve Bank of India guidelines, that is low risk customer, medium risk customer, high risk customer. There should be at least minimum 3 profiles: low risk, medium risk and high risk customer, and the customer profiles must be rated accordingly, according to his occupation. It could be according to his turnover, according to his you can say social status. Like if we say a person is PEP, that is political exposed person. PEP means politically exposed person. In this case, PEP is said to be high risk category. He is categorized under high risk customer. Okay, or it may be also be a case that a NGO is there, or NPO is there, non-profit organization is there. Okay, in all these cases, these are high risk customer. So risk management should be starting with the account opening process itself. So you must be looking into different factors which may be looked into properly so as to maintain the customer profile. Okay, it could also be based on the product category. Likewise, if there is a domestic transaction, then it is not that much riskier concept. But if it is a cross-border wire transaction, then it is a riskier concept. Okay, so risk management is based on different parameters. Then it is regarding the CIP, that is customer identification procedure. So first of all, whenever we are to open a bank account, we need to identify the customer and we need to positively establish his identity. Okay, we need to identify the customer and positively establish his identity. That is regarding verifying the identity using sources and documents. Using sources and documents. And further, there must be sufficient information to establish the identity of the customer. There must be sufficient information to establish the identity of the customer and ascertain the purpose of intended nature of the banking relationship. So whenever we are going to open an account, we should ask from the customer that what transaction or what turnover you are going to maintain in the account. Okay, just a lump sum of the amount should be asked. Then it is regarding the OVDs. When we say we need to identify the customer, how can we do that? We can do it through the officially valid documents, the documents which are issued by the government of India, So OVDs are officially valid documents, and there are 6 OVDs. And only PAN card is one OVD where the address is not mentioned. And the OVDs, that is officially valid documents which are valid for all the customers. These are passport, driving license, PAN card, voter ID card, NREGA job card, or letter issued by the UIDAI or National Population Register. Okay. Then for low risk customers, simplified customer due diligence procedure can be followed. For the low risk customers, like if we say a person who is under financial inclusion, or who is having no account anywhere else, and he is not having OVDs with him, in that case the policies allows to open the account based on the simplified procedure. In that case, ID card with applicant's photograph issued by central or state government department, or any of the statutory or regulatory authority or public sector undertaking, or any of the SCBs, public financial institutions, it is allowed. It is allowed for low risk customers only, but for all the customers, all the other customers must be accompanied with these OVDs. Okay, and further, in case of low risk customer, where the customer is unable to complete the documentation and the due diligence is pending, it is to be done in 6 months after establishing the relationship. See, one thing over here, person over here is a low risk customer. Let us say his profile is low risk, and further he wants to open an account with the bank. In that case, he is allowed if he is accompanying any of these documents. And further, if the relationship is established, so within 6 months the due diligence must be processed. Diligence must be processed. We will be learning about what is customer due diligence, CDD. Okay, so for simplified measures, the utility bills not older than 2 months. Utility bill means if you have any electricity connection, or you have any telephone bill, in that case, if it is not older than 2 months, that is also acceptable. For the property tax receipts, or bank account, or post office account statement, or it could be the pension or family pension payment orders, or letter of allotment of accommodation from the government authorities in case the person belongs to some slum area, and documents issued by the government department of foreign jurisdiction, and letter issued by the foreign embassy or mission of India are valid as a proof of address. So these can be accepted as valid address proof. And for the identity proof, these can be acceptable, like the proofs which are issued by the central or state government, statutory or regulatory authorities, PSU, SCBs, and for the public financial institutions. Is it clear? So that is regarding the OVDs. So main thing that you need to memorize regarding it, that is there are 6 OVDs, and PAN card is the only OVD where the address is not mentioned. Okay, and for the low risk customers, a simplified procedure must be followed, and if the relationship is established, then in that case the due diligence must be completed within 6 months from the establishment of the relationship. Okay. Customer categorization, profile categorization is there based on the identification of the customer, verification of the customer, we can say. Verification of the customer. You need to verify from the surroundings. Then it is regarding the monitoring transactions. So banks need to monitor the transactions as per the Prevention of Money Laundering Act or Prevention of Money Laundering Prevention of Money Laundering Act and Prevention of Money Laundering Regulations stipulations. And further, if there is any kind of unusual transaction, large or complex transactions, or if there is any threshold amount that is fixed, in all these cases the transactions must be regulated. The transactions must be regulated. Under the monitoring transactions, a report is being forwarded. A report is being forwarded and it is said to be cash transaction report, CTR. It is CTR, that is cash transaction report. That is, if there is aggregate credit of rupees 10 lakh or more, if there is aggregate credit of rupees 10 lakh, above rupees 10 lakh, if there is aggregate credit above rupees 10 lakh in within a month, within 1 month, for single person, in that case those transactions must be reported. In that case those transactions must be reported under this report CTR. Okay, and let me give you an example. For example, person A over here is maintaining two accounts. He is having a saving fund account and a current account. He is having a saving fund account and a current account. This is a proprietary account. It is a proprietary account. Now in this case, in this case, saving fund account, he deposited rupees 4 lakh. He deposited rupees 4 lakh in the month of January, and also in current account he deposited rupees 7 lakh in the month of January. Should it be reported or not? Should it be reported under CTR or not? So the scenario is, person A is maintaining two accounts with you, saving fund account and a proprietorship account, and he deposited rupees 4 lakh in the month of January and also deposited rupees 7 lakh on some other day in January itself. Okay, should these transactions be reported under CTR? Yes or no? These transactions should be reported in CTR, yes or no? So one answer only there right now. This is to be reported. Let me tell you, this is to be reported. Now the capacity over here is same. The person deposited in the same capacity, individual capacity in the saving fund account and also the individual capacity in the current account, because this is a proprietorship account. Okay, so as I told you that if the aggregate amount of above rupee 10 lakh has been deposited within 1 month, then that must be reported under CTR. Okay, so we can say transactions exceeding the threshold amounts must be reported, must be looked into. And further, transactions not consistent with the customer profile. You know, one person who receives pension every month he receives pension, and further he receives rupees 750 only every month, and whenever the pension is credited, next day he comes and withdraws his pension amount rupees 700. So it may be a case study type questions also, that whenever the pension is credited into the account of person B withdraws rupees 700 every month. Okay, now there are many of the transactions which credited within 1 month, rupees 1 lakh, rupees 2 lakh, rupees 3 lakh. So many of the different transactions are being deposited into his account in single month in cash form, but from some other branches. It may be some NEFT transaction also which credited into his account, but the total amount was below rupees 10 lakh. Now in this case, are these transactions consistent with the profile of person B? No, the transactions are not consistent with the profile of the customer. So simply looking at the profile of the customer, looking at the transaction pattern of the customer, you can judge if these transactions are consistent or not. Okay, also the case where there is quick rise in the turnover or high turnover, those cases are also suspicious. So under the monitoring transactions, there are 5 reports that are to be submitted with the FIU IND. There are 5 reports, those are required to be submitted with FIU IND. What first report we already learned about, that is CTR, cash transaction report. Second report, it is CCR, that is counterfeit currency report. STR, it is a suspicious transaction report. CBTR, it is cross border wire transaction report. NTR, it is non-profit transaction report, non-profit organization transaction report. These are to be submitted with FIU IND. Now what does FIU IND does? FIU IND क्या करता है? FIU IND collects this information, processes this information, analyze this information, and further passes on this information to the different entities or EDs, which are directorates. Okay, so these 5 reports are there. Next is regarding eKYC or Aadhaar enabled verification. eKYC, that is Aadhaar enabled verification. So under PMLR 9, that is prevention of money laundering rules 9, KYC, these are valid for KYC verification. These are valid for KYC verification. Okay, so it is available and validated by the biometrics, either through the thumb scan or either through the iris scan. This information is available. Which information is available publicly after the validation? Age, name, gender, photograph. These are electronically available. Then it is regarding some account types. First of all, we will study about the small accounts. So where customer is low risk customer, where customer profile is low risk and he is unable to provide officially valid document, in that case small deposit account is to be opened. See, person A visited the branch, he does not process any of the officially valid document, but as per the government agenda of the financial inclusion or financial literacy, he needs to open his account with the bank. Okay, so he is allowed to open which account? Small deposit account, but there are some conditions. What are the conditions? First of all, the aggregate of total credits in one financial year should not exceed rupees 1 lakh. So the total credit entries, cash entries made by person A should not be exceeding rupees 1 lakh, and further the aggregate of withdrawal in 1 month should not be exceeding rupees 10,000. Okay, so aggregate withdrawal in 1 month should not be exceeding 10,000 and aggregate credits should not be exceeding rupee 1 lakh in one financial year. Further, balance at any point should not be above rupee 50,000. So these are the 3 conditions that need to be fulfilled. And further, person A just needs to provide his self-attested photograph affixed with his signature or thumb impression. To open a small deposit account. And further, this type of account, that is small deposit account, is to be opened only where the branches are core banking solution linked. जहां पर ब्रांचेस CBS लिंक्ड हैं, सिर्फ और सिर्फ वहीं पर ये डिपॉजिट अकाउंट ओपन करना, स्मॉल डिपॉजिट अकाउंट. व्हाट इज द रीजन बिहाइंड इट? इफ पर्सन A went to bank XYZ, opened the small account, now he needs not to submit any kind of identity proof over here. He just pretended that he does not possess any kind of OVDs. Okay, and he just opened a small deposit account with the bank XYZ. Similarly, he opened with bank ABC, PQR, and all the other banks. And further, it could also be the case, we are talking about the different banks. It is possible, it is still possible, but what about XYZ बैंक की ही अलग-अलग branches में जा रहा है वो? What about if he visited different branches of same bank? He visited branch A first of all and opened a small account, small deposit account. Then he visited branch B, then C, then D, and the list goes on. Is it valid over here that he is visiting in different branches and opened the small deposit account so as to hide or conceal his funds from the authorities? No. So account should only be opened in those branches where the branches are CBS linked, and further small accounts are operational for first 12 months. This account which is opened without any of the ID proofs, without any of the address proof, is operational for first 12 months only. After 12 months, if the customer produces a receipt of applying the officially valid document, then 12 months more period will be provided to him. Means next review after 24 months in total. Is it clear? Okay. So friends, that would be regarding this video.